Hi, my name is Mark Maupin. I'm with the National Real Estate Network, and I've got on with me Jeff Dameron. And if you are own commercial property, or if you renovated property, or you have employees, you're going to want to listen to what we got to say. Chances are you are due tax credits. I know most of you've heard about like PPP or ERC, and pretty much everybody knows about those programs, but those were kind of like band-aids to what we're going to talk about. They were temporary programs. What we're talking about is long-term tax incentive programs that are available to you that most people don't know about. So, and the majority of you qualify for. So I'm going to jump right into this. All the programs we're talking about are permanent. We're going to be talking about a company that's been doing this for 23 years. And that company's done over $37 billion worth of credits to the people that they've worked for. And they've had zero tax disallowances for the past 23 years. So the first program that Jeff and I want to talk to you about is cross segregation. So this applies to people that own property or you've renovated property. There's another category in there too. Own, renovate, are you getting ready to
Well, if it was a major lease, like a lease improvement, even if you don't own it and you did some major work to it, that would qualify too, Mark. I think that's
yeah,
what you were looking for.
yeah,
So even if you don't own it, you can still get a substantial credit.
exactly. So I think the best way to do this, Jeff, is just to maybe give an example. Like if you let's say that you have a building that you paid $3.9 million for, and when you depreciate something, you have to depreciate it over 39 years in commercial property. So
Yes.
uh, so basically, if you paid 3.9 and you got to do it over 39 years, that's why I picked that number. That's going to be $100,000 a year in depreciation. And let's say you've now owned that building 5 years. So you've gotten those tax benefits, those tax credits of $500,000, $100,000 each year. But you've got 39 years. And most owners don't plan on owning that building for that long of a period. And they'd like to get
True.
additional money if they could. So what you can do is you can take accelerated depreciation with cost segregation. And so like that example of that building, if you did it after 5 years, instead of just getting 500,000, you'd be able to get an additional 288,000 in that years by doing the accelerated depreciation. So if you purchased or renovated in the past 20 years, made a purchase, you would qualify for this. So, and people don't realize it, and you're going to get that money instantly to be able to spend. So,
Yeah, another thing is the value of the building has to be at least $250,000. And most commercial buildings are well beyond that. So that's an easy, you know, box to check, so to speak.
exactly. Uh, and if you've paid federal tax in the last 3 years, or you plan to pay it in the next year, you qualified. So, there's some other things too, like from a real estate standpoint, they actually have a property tax where they'll come in and get property taxes lowered. And the crazy part is most people that own larger commercial pieces of property, their properties have actually gone down in value because of COVID, because of the
Right.
reduced vacancies. And you don't see the tax people saying, oh, guess what? We're going to lower the value of your property. That just doesn't happen.
Yeah. They're not out there to knock on your door and say, we got good news, like Publishers Clearinghouse, right?
They say nationally that 45% of commercial property owners qualify for tax reduction. And the thing that we didn't mention yet, the company we're talking about does all this on performance basis. Not only do they come in and they've got tools where you can even do a self-evaluation to see what you would get back. And then if you want them to represent you, they'll do that based upon a performance basis. So there's some
Yeah,
other.
if I could touch on that a little bit more, Mark. So the business model is finding cash, cash flow, tax incentives, any way we can help the business owner, the property, commercial property owner, increase their bottom line. And again, like you mentioned, it's all contingency performance based. Unless we're successful, which we usually are most of the time, especially in the cost segregation, because well over 90% of the commercial property owners, Mark, as you know, don't even know about it or have not ever taken advantage of the accelerated cost segregation business model. So tax
If
incentive.
you want to take advantage of what they do, they actually search hundreds and hundreds of tax incentive programs that your business would qualify for.
Yeah.
So just a few of those, and Jeff, I may need your help to talk about this, is one that's called the Work Opportunity Tax Credit. And they say on an average that 22% of your employees qualify for that credit, where that credit's coming back to you as a business owner. Think about that. You're running a business right now, and 22% of your employees, you qualify for getting a tax credit back, and you're not taking advantage of it.
Well, yeah, and speaking of that, they call the work opportunity tax credit, they call it WOTC. So, and this is a year after year program, Mark. It's not a like an ERC or PPP where it's a one-shot deal. So it's really a blessing for business owners. And it's, part of the reason that Stride is the name of the company, by the way, out of Fenton, Michigan, been around for 23 years, as you mentioned. Part of the reason they're able to have such a high success rate in getting their clients the work opportunity tax credit is because they have an app, which Mark will share in the comments and have a link to it, where a client can sign up and input their human resource personnel in there, and they call it the HRIS, which stands for Human Resource Information System. And basically, there's a lot of small and medium-sized businesses that don't even have a HR department. So the great part about this app is it's updated constantly, and with the algorithms they have in place and the experience for the last 20 some years doing this, they're able to quickly identify what candidates and what employees are able to get this. And so that's the first credit. And then of course they have another one called the research and development credit. And the name is a little bit of a misnomer because it's more far reaching than just perhaps an engineering company or an advanced manufacturing company. So, and that I believe you can go back 2-3 years and get credits in arrears, Mark, for that too. But that's just a sampling along with the cost segregation that this company is able to find. Their app, as you mentioned, Mark, searches local, state, and federal tax credits on a monthly basis and finds it's just an amazing company, and business owners love it.
Yeah. And what's cool about it, you as a business owner, you're doing all your normal business, and they're doing all this research and looking for all the tax credits and tracking all this stuff that gets you back those credits in the background. So it's good thing. And then I like this one too. If you're got employees that are in a disaster zone, there's credits even for that. It's just hundreds of these different credit programs that business
Yeah.
owners know about. So I did put that link into the chat, and I'm going to put the link into the description on the video below. So all you have to do is click on that link. They can go in there, Jeff, if I'm correct, and go ahead and input all their information. It'll give them an estimate of what they would get back in tax credits. And if you'd like to work
Yeah.
with them, you can sign up right there. So.
Yeah, that's exactly right, Mark. And so what happens when they input their information, the information goes directly to the growth management group, and they'll get a email confirming they received the information, and they'll send back the client a link to set up a quick interview overview to talk about implementing these credits and how it will benefit their business.
That's great. And what I'll do too is I'll put our phone numbers in the description too. So if you got a question for Jeff or need some direction around it, you can call him or you can call me, either one. With that said, we appreciate you being on, and go get some of them tax credits.
Sounds good. Thanks, Mark.